Hi, Kristi Sullivan here with Sullivan Financial Planning. Thanks for watching my video. Today I want to talk about just my opinion, absolutely just an opinion, not a hard prediction about whether or not the Tax Cuts and Jobs Act, Tax Act will sunset as predicted or as planned in 2026. In other words, at the time I'm recording this video, it's early 2025. This is our last year with the current tax brackets in place and estate planning exemptions, child tax credits, and other benefits that many taxpayers realized from the Tax Cuts and Jobs Act, which was enacted in 2017. So that act, the way it was written into law was that everything was going to go back to the way it was in 2016 at the end of 2026. So it was only meant to be temporary. It makes politicians look good to cut taxes, but then, people complain about the fiscal responsibility of such actions in the long term, yada, yada. So the question is now, should you be planning for a change in tax brackets, estate planning rules, etc., in a year? And the answer is, of course, I don't know, but I can speculate that anything that's perceived as an increase in taxes is very unpopular politically. So I'm guessing, even though the sunset is not really raising taxes, it is. Everyone's tax brackets will go up. The amount that you can pass along to your heirs, estate tax free, will go down. The child tax credit will be cut in half that people have been enjoying at $2,000 a year will go down to back down to 1,000 as it was before. There are other provisions that maybe people will like if they go back to the old tax law, like the SALT provision, which is deducting state and local taxes off of your federal income tax return. There's a lot of pros and cons, but I believe that the current administration will not want to be seen as raising taxes. So they will probably keep a lot of the more popular elements of the Tax Cuts and Jobs Act intact, or the same. Another big one is the way that the standard deduction works now under the Tax Cuts and Jobs Act, which is basically if you're married, you get double the standard deduction of a single person. Whereas if things go back to the way they were pre-2017, married people will have what's called the marriage penalty on their income taxes. And also a lot less people have to itemize their taxes under the current tax law than would if we revert back to pre-2017. So there are a lot of conveniences, a lot of benefits for people who are enjoying the Tax Cuts and Jobs Act right now that maybe the current political administration will not want to see go away. So I'm thinking maybe there will be a partial reversion with the sunset provision. Maybe some of the business taxes, some of those changes, which I don't go into here, will go back to the way they were before. But maybe some things like the standard deduction being higher for married couples and being higher in general. So fewer people have to itemize their taxes. Great for the IRS, great for the public. Those things may stay in place. So obviously stay tuned, be in touch with your financial advisor or your tax advisor to prepare for any changes that might be coming your way. But don't panic, don't worry. I have a feeling a lot of the things that we enjoy about the Tax Cuts and Jobs Act will stay in place for the longer term, maybe not forever, but maybe another 5 years or so. They'll kick the can down the road as they so often do. Thanks for watching. I hope this was helpful. Have a great day.